Hello and welcome. You're watching Market Fatafat on ET Now with me, Snehi Shah. And today with me on the show is Cheryl D'Souza, and this is a show where we are going to be taking you through all the top buzzers in today's trade, the stocks that are garnering all the buzz on D Street today. But before that, let's take a look at the markets and what the markets are up to right now. And Nifty continues to be below 25,000, in fact, deeply pressured today, Cheryl.
Absolutely, Snehi, a very good afternoon to you. Not a great afternoon coming in for the markets because we are now at the day's lowest point when you talk of the benchmark indices. As you can see it on your screen, we are sub that 25,000 mark. When you talk about the Nifty, it is the advanced decline ratio that is in the favor of the declines as we speak. You have the Nifty Bank that is falling much more than the benchmark indices at this point in time. As you can see it on your screen, 1.1% down to coming in for Nifty Bank. It is the auto sector that is under pressure, but apart from the auto sector, it is realty sector also that is under immense pressure in trade today. So both of these sectors are seeing declines of over 3%, and they are the top sectoral losers in trade today. Talking about losers then, Bajaj Auto, that is hogging all the limelight. It is seeing a downtick of about 11.5%. You have Shriram Finance, Nestle, M&M as well as Ultratech among the other set of losers. While on the flip side, it is Infosys holding on to gains just ahead of its earnings, 2.8% uptick coming for Infosys. Tech Mahindra, SBI, L&T and Power Grid are the other set of gainers in trade. But yes, the afternoon is definitely not looking good when you talk about the markets at this point in time, Snehi.
Absolutely, looking rather bleak going ahead as well. You have 2 hours of trade left. Let's see what happens on the Nifty, but looking very bleak as of now because 0.8% lower is where Nifty is at, almost at the lowest point of the day. But on that note, let's get kick-started with all the stocks that are buzzing in trade, take you through each individual buzzer and tell you why they are having all the spotlight in the trade today. But on the technical front today, let's welcome Ashish Kyal on board, founder and CEO of Wave Strategy Advisors. And from our research team, we have Gaurav joining us. Welcome both of you on the show, and Ashish, thank you so much for joining us. And I'm going to kickstart this show with the first stock, and that has to be Bajaj Auto, like Cheryl mentioned, because deeply under pressure right now. That stock is not holding up well at all. Remember, yesterday they reported an inline set of numbers, this company, but brokerage notes have given some the stock today. Almost 11.5% lower is where the stock is. First up, a note coming in from ICICI Securities. They've downgraded the stock to a sell from a reduced, but have gone ahead and hiked the target price to 9,118. They say that positives are largely factored in already, and export recovery has been sluggish so far. From Equirus, you have a downgrade coming in to a short from a reduced, and target price is also at 9,451. From CLSA, they've maintained an underperform with a target price of 9,493, and they believe that the earnings this time have been a slight miss. Citi, however, has maintained a sell rating and has also cut the target price to rupees 7,800 from 7,900. And they say that the Q2 results are below estimates and the festive outlook remains cautious. Axis Capital has also maintained a sell rating but has hiked the target price to 8,000 rupees. They say that high earnings growth expectations and expensive valuations have caused this downgrade. And lastly, NK has also downgraded the stock to a sell rating. So across the street, you have downgrades coming in for this stock, and that is why the stock is deeply under pressure as we speak.
As well, that's one of the reasons why the stock is under pressure. In fact, let's hear out what Gurmeet Chadda had to say about the entire auto space, especially Bajaj Auto, as well as we spoke to Vinkesh Gulati to get an understanding of what is happening with the demand per se. So let's hear out what both of them had to say.
Amongst two-wheelers, I think we have TVS. We have TVS Holding also, which is the holding company which we bought, and Sundaram Clayton in the portfolio. So TVS would be first, followed by Bajaj. I'm more interested in the auto ancillaries, including names like Sandhar Technologies. And the correction has been, if you see, 20-25% in most counters. Uno Minda, for example, is down, although Uno Minda 60% is more towards four-wheeler in terms of, the mix. Sandhar probably 60-65% is two-wheelers. So they are down about 20-25%. And I think some of the this commentary will get built into the price very quickly.
Inventory in two-wheeler is not a challenge as of today. We are seeing a good demand here. The inquiries are good. And with rural support, we'll 100% see a good sales with a double-digit growth, maybe just a initial double-digit growth. By the year-end, calendar or fiscal, we will see a double-digit growth happening on the retail side. H2 is better than H1. So that is what I'm commenting on. If we have seen 9.08% growth in two-wheeler H1, I'm sure the fiscal year will end around 10 to 12, not below that.
All right, so that's about the auto sector in depth. That is the top sectoral, among the top sectoral loser, from one loser to another. In fact, you have Nestle India that is under immense pressure in trade today, and on back of earnings reaction, the stock was down about 3% or so. One of the reasons why, and the primary reasons why, is the earnings have missed the estimates. If you talk about the revenue, it's missed estimate. The EBITDA is missed estimate. If you look at PAT, the adjusted PAT, then that has missed an estimate. But if you look at PAT on the whole, it's come above the estimates. 986 crore rupees is the PAT as against 908 crore rupees a year ago. So it's a jump in the PAT number, but there is an exceptional gain as well. So when you adjust for that, that one also has missed estimates. Margin, on the other hand, is coming below estimates. The margins have come in at around 22.9% as against 24.3% a year ago. So 144 basis point cut coming in for the margins. Like I said, the PAT was boosted by the exceptional gain of about 290 crore rupees that's coming from the nutraceutical business and Nestle business service division. If you talk about what the management commentary has been, that they have flagged off that there has been a weak consumer demand. They're saying that the consumer demand was weak. They're saying the commodity prices remain elevated for coffee as well as cocoa, and they are also saying that the beverage business has managed to post a double-digit growth. The milkmaid business also has managed to post a double-digit growth. But the fact that numbers have missed street estimates, the commentary on the consumer demand has not been good. You've seen the stock under pressure.
Well, absolutely. So, first Nifty FMCG company, and it's not looking good. But let's move on and talk about Emphasis. And Ashish, you've picked out this stock for us on the charts today. It's an earnings candidate. Mixed set of numbers have come in. If I pull up the charts, last 6 months it's given a 30% return, but last 1 month it's given negative returns. So, do you now believe it's time for the stock to pick up some momentum again?
Yes, hi, afternoon to you and all the viewers. If you look at Emphasis, it is up by nearly 6% in today's market when the index is down almost 1% now, and that is bucking the trend. So if you look at IT as a sector as a whole, we can clearly see the top performers are Infosys and the IT stocks. So that shows that the overall IT outcome can be positive. We can see a very strong breakout in Emphasis. It was consolidating for quite some time, giving a very strong move on the upside. And we can expect the stock to reach towards the level of around 3,300 or much higher levels from a medium-term perspective. So one can create long positions over short-term for 3,300 as the target on Emphasis. And from a medium-term, we can even expect it to cross 3,600 as well on the upside. On the downside, for the support for the stock is going to be around 2,950, which is near today's low. So use any dips to buy with 2,950 as a stop loss, expecting a target of 3,300 followed by 3,600.
Alright, so that's a take coming in on Emphasis. Definitely a bullish chance coming in from Ashish. But let's hear out actually the management commentary post their Q2 numbers. They posted their Q2 numbers yesterday post market hours. Let's hear out what the management had to say.
Q4 calendar typically seasonally weak. Some of that seasonality will play out, but we do expect that we can continue to see growth trajectory build up again between Q3 and Q4. And that's why I think for a full year basis, we still believe that we can continue to grow above market. So I think that's the guidance purely based on order book, pipeline, deal book, in-client activity, and of course, improving macro, especially around BFS. The deal pipeline is actually up about 23% on a YOY basis in Q2, and also up low single digits on a sequential basis. We also had a pretty big jump YOY last quarter. So I think if you look at the stages, origination of deals clearly seems to be originating deals. There are two trends to call out in the pipeline. One, we've definitely seen, even in the TCV number, we've seen a healthy mix of the sub 10 million deal category, even actually the sub 5 million deal category. That's been the biggest jump even on a YOY basis. That indicates that in-year quick consumption, short burst programs are getting funded. And that's a sign of discretionary spend slowly coming back. We called that out in March, April as well, and we are seeing that play out, in the last quarter as well.
Okay, that's the word coming in from the management of Emphasis. But let's shift focus. And Gaurav, you've picked out Axis Bank. It's an earnings candidate, and numbers are expected later today. So tell us what the street is penciling in.
Well, yes. When we talk about Axis Bank now, the bank is all set to come up with the numbers, and when we look at the numbers, now Street is expecting some kind of flattish growth because net interest income and pre-provision operating profit is likely to remain stable on a quarter-on-quarter basis. Now, when it comes to provision, now Street is expecting some kind of downtick in provisions, and that might lead to an uptick in profitability overall. When it comes to asset quality, that is the area where Street is looking out for, because in the last quarter, let's not forget that the bank had actually come up with a negative surprise in terms of asset quality in unsecured book, and that is where the focus will be. But apart from that, when we look at the advances and deposits, they are seeing around stable growth of around 3% on a quarter-on-quarter basis in both the terms. But definitely any kind of commentary on net interest margins, any kind of commentary on asset quality will be watch out for during the results of Axis Bank. Right now, when we talk about the stock, it is down almost 2%, but definitely watching out on how numbers pans out and how the commentary comes out from the management.
Alright, so that's about Axis Bank. We are expecting this number later today. But Ashish, coming to you, GMDC, how is this one looking on the charts?
See, if you look at GMDC, the stock looks to be good enough. We can clearly see the metal space and has been buzzing and managing to outperform. And GMDC has also showed a very smart recovery from the lows of around 320. We can expect the stock to move on the upside towards the level of around 390, which is the hurdle level. And the support for the stock is going to be around 340. So any dip can be used as a buying opportunity for the target of 390 on GMDC.
Okay, well, thanks for that view. Let's move on then. And the aviation world in India is currently going through a major crisis as hoax bomb calls are being made every day now, resulting into financial loss for airline companies. Hence, the aviation ministry is looking at forming new rules that can act as a deterrent for such acts in the future. And my colleague Sumit Chaturvedi is joining us with exclusive details on this. Sumit.
Bomb hoax calls have become a big problem for the aviation world in India. Currently, every day 2 to 3 flights, they are getting diverted or they are taken to isolated bay because of these calls. Now, aviation ministry is looking at new rules to deter such kind of calls. Now, they are in touch with law ministry for these new rules. They are looking at all possible angles, even talking to other countries how these situations are handled. Minister of Home Affairs is already looking at the cyber security angle. Aviation ministry is of the view that it is impacting morale and financial both of the airlines, not good for the country. Today also Indigo Airlines flight was diverted and Vistara's flight was diverted. So every day there are multiple incidents when such hoax calls or mails are forwarded to airlines and they lead to grounding of planes. So this is a big problem that is being faced by aviation sector. That's why aviation ministry is looking at these new rules. Well, what are the new rules? Well, that has been spoken about. Some of the possibilities are that some of the senders of these hoax calls are using VPNs, virtual private networks, to mask these emails or hoax calls. So that's angle is also being looked at. But at this moment, yes, it's very much creating troubles for the airlines and for the aviation ministry and industry as a whole.
Thank you so much for that, Sumit, for getting us the latest on that sort of a menace, as you can say, actually, Snehi, given the fact that day in and day out, you are getting these hoax calls, bomb hoax calls for the aviation sector. But on that note, we slip into a break on this edition of Market Fatafat. More on the other side, don't go anywhere.
Hi there, welcome back. You're watching Market Fatafat on ET now. Let's keep it going with all the stocks in focus today, and let me take it across to Ashish now for a technical check coming in on M&M. Ashish, this is a stock that a lot of technical experts who come on our show are picking out almost on an everyday basis. Tell us what is making this stock such a techie favorite, if I could call it that, because last 6 months the stock is up roughly 46%. 42% on the screen. So tell us if you are expecting this momentum to sustain going ahead, or is it now time for some sluggishness on the charts for this one?
Yes, if you look at M&M, I think there is some kind of a sluggishness post what happened with Bajaj Auto, and we can see that the drag has been not only to Bajaj Auto, but it has been across the two-wheelers and the auto space as well. So M&M has broken its important support level, which was around the low of 2980, just trading around that level. Looks like there can be short-term profit booking which can happen here. Expecting a short-term sell on this stock, which can take it towards the level of 2860 on the downside, 2860 to 2820. So it's best to be trading using pullback to sell M&M for 2820 as the target. On the upside, the resistance for the stock is going to be around 3060 levels.
All right, so that's the take coming in on M&M, but staying with the auto space, we also spoke to Sai Giridhar, who's the Vice President of FADA, where he shared the outlook for the festive season growth. He's also hopeful of achieving the target of above 42 lakh unit sale this festive season.
For first 10 days of the festivity is that there is a double-digit growth, and if you talk about two-wheeler segment in particular, it's approximately 12% growth if you compare it with last year. So we are still bullish, and we are still believing that we'll be able to achieve a 20% growth in this festivity period. Last year, the entire festival of 42 days, there were approximately 38 lakh vehicles which were sold across India. This year, we are targeting approximately 45 lakhs, and we think that we are in line, because if you see that first 10 days contribute 20% of the entire amount of vehicles which are being sold, and then we are in line of achieving approximately 45 lakh vehicles for the entire 42 days of festivity.
All right, let's talk about an earnings candidate that has just come out with its numbers, and you have the numbers coming on the bottom of your screen. That's Karur Vyasa Bank, and in fact under pressure slightly after those numbers came, but a good spike also now being seen as soon as more numbers are trickling in. Let me take you through what these numbers look like. You have the net interest income that's coming at 1060 crores, which is up 16% year on year. PAT has also gone up by 25% on a year on year basis, coming in at 474 crores versus 378 crores this time last year. PPOP has also seen a good growth of 28%. These are of course standalone numbers on a year-on-year basis. But the worrisome part a little bit over here is the provisions figure, because that has come in at 180 crores compared to 133, which is an uptick of more than 35% on a sequential basis. GNPA has improved. You have NNPA that has also improved nominally. So both of these are looking good. And in fact, I think, Cheryl, the asset quality is the reason why we've seen a little bit of a spike coming in on the stock right now.
Absolutely. We'll just refresh this the line graph for you, because the stock actually moved in the positive territory. The fact that there was a betterment when you talk about the asset quality on a quarter-on-quarter basis, but now it's actually erased some of those gains. But let's move on. Let's talk about ABB India. And why is ABB India in focus? Because ABB Global came out with their numbers where they had seen where the orders, if you look at it, it's coming at around $8.19 billion as the estimates are around $8.22 billion. While if you look at the margin, they are expecting, the revenue for Q4, they are seeing it to low to mid-single digits revenue growth. While if you look at their India order growth, that's on an uptick of about 9% on a year-on-year basis, and that's why the stock actually saw a dip of approximately 3% on an intraday basis. But they're on recover the fact that there was a growth in the ABB India orders, and if you look at the global picture as well, the India orders have seen a growth, while in the US and the European region there wasn't that great an uptick coming in for the orders. So on back of that, you have ABB India that's in focus today.
Okay, so that's why ABB India is in focus. But Ashish, coming to you now once again for a technical check. For JSW Steel is the stock that you've picked out for us. And if I pull up the charts, year to date, the stock has not done much, just a 10-11% modest return coming in. Last 6 months also 12%. Which direction are you seeing the stock heading in, and what's your outlook here?
See, if you look at JSW Steel, over short term, we are seeing pressure building up. The stock has broken below the support level of 983 as well, and is trading much lower than that. So looks like there is going to be some short-term pressure. We can expect it to move toward the price action support area of around 950 over short term. And on the upside, one can maintain a stop loss of around 995. So as long as 995 remains intact, we can expect it to move towards 950 or lower levels.
All right, let's shift focus then. Gaurav, let's talk about KEI Industries. Why is this particular counter in focus today?
Well, yes, when it comes to KEI Industries, we saw a weak set of numbers yesterday. We saw the stock tanked almost by 7%. And after that, we also heard management saying that they have maintained their growth target of around 17%, and EBITDA margin is likely to be between 10.5 to 11% in FY25. And also they said that the rationale for QIP of around 2,000 crore rupees will be for the Sanand project, which will have a capex of around 1,800 to 1,900 crore rupees. Apart from that, we also have Jefferies, who maintained buy rating and also hiked the target price to 5,720 rupees. What they say is that we saw a weak quarter, but recovery is lying ahead. What they are also saying is that the management maintained its FY25 guidance, which is again a positive thing. They believe that in the next 12 to 18 months, we may see a positive surprise in the power and distribution segment. And lastly, they also believe that this counter is actually a holistic play when it comes to power, capex and exports. But overall, when we look at the numbers and when we look at the stock performance, it is still under pressure. It is down once again almost by 5%. So definitely a counter which is worth keeping an eye out on when brokerages are being a little bullish on this counter.
All right, so that is KEI Industries. We'll get you the management bite in a short while from now. But just a quick look at the markets, because we have dipped further when you talk about the benchmark indices. We are sub that 24,800 mark when you talk about the Nifty. We've shaved off at least 280 points from the day's high. Nifty Bank is the place where the pain is much more when you compare it to benchmarks. And the broader markets, 1.5% downtick coming in for the mid-cap index as we speak. So yes, not a great afternoon coming in, at least for the Indian markets. But as promised, let's hear what the KEI management had to say post earnings.
We can't give such a long range guidance. We have already guided that this year we expect to do around 10.5 to 11% overall EBITDA in the full year. So our guidance remains same. If we are able to do better, we will definitely aim. We have already given a guidance of a top line growth of 15 to 17% in overall in the full financial year. And we are on track.
Okay, on that note, it's time for a breather on this edition of Market Fatafat. We'll be talking about more stocks and buzzes on the other side of this break, so you stay tuned.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.